I think coming into this week, the intermittent headlines over the weekend talking about the drone strikes of the oil fields, that clearly added a lot of pressure to the overall markets, and clearly that was going to affect oil prices, and we saw that large spike that came into the session yesterday. I think investors were using that as an opportunity on Monday to kind of add a little bit more fear to the market and take some risk off the table. Bouncing back again today. One disconnect or reconnect that we're seeing again is last week we saw the market kind of trade in line, and we saw the Russell was up significantly. Today we see the Russell coming back in again while the market is relatively flat at this point. Continue to keep an eye on the VIX. I think that's been a really good gauge looking forward as to what the market is really feeling.
So are you losing faith in value stocks right now as we're readjusting again?
No, I'm not. I think what's happening is that we've got our normal economic calendar that's going to make our markets move one way or another, but really not going to make a tremendous amount of moves. We know the Fed's going to come out this week, and I think the market is pricing in cutting rates. It's really going to be interesting to see how their outlook is moving forward. We continue to talk about 2020 elections, the impact that's going to have on our markets, and that date's getting closer and closer. We continue to talk about China tariffs and the uncertainty that's there. So I think all those things we are prepared with. It's just, the oil strike over the weekend, U.S., Iran, Saudi, all these mixed together. I think that just, in a short period of time, added a little fear to our markets.
It did kind of throw us off. Now we're going to hear from the Fed tomorrow. As you're looking at your portfolio, talking to clients, what do we need to hear from the Fed?
I think we need a few things. I think one is that we need to know that the Fed will remain independent and be their own thinking body themselves. I think we need to know and reiterate that the Fed is going to remain data dependent and continually watch the data that's out there and not get swayed by any other forces that are out there. And I think we also need to keep in mind and want the Fed to continue to focus on the fact that the uncertainty with U.S.-China interest tariffs and how that's going to affect U.S. economy, U.S. companies, and interest rates. I think they're going to have to continue to remain focused on that. Probably can use the same blueprint they've used the last two meetings. But at this point, I think anything out of the lines down the middle will scare this market.
All right, now we're looking at the Dow Jones right now. We are lower today, but still near those record highs. What levels are you watching?
Really looking the S&P, we're trading around that 3,000 level. Yes, it's a psychological level. I don't think it's a real technical pivot level. But as you trade, 5 or 8 points above or below, that quickly becomes a pivot point.
Sure does. Listen, it has an emotional impact on me too.
Yeah, it absolutely does. And I just think, just from a numerical point of view, and also with the Dow 27,000, those really aren't. You're not going to look at those in a chart and really point those out. But I think from a psychological level, when the market gets above 3,000, sometimes investors and programs and algorithms start to think it's a little lofty, so they put a little more pressure on the markets.
All right, thank you. That's Jonathan Corpina from Meridian Equity Partners. Have a great day.
Thank you. You too, Liv.